Again, everyone, thanks for waiting. We are going to go ahead and get started. We've got the majority of the people here joining us, so we're going to go ahead and begin. Thank you all so much for joining us on today's webinar. You can visit the Chamber website where a full list of our webinars and other resources can be found on our COVID-19 page. Got a few housekeeping items before we begin. We're going to have a Q&A session at the end of the webinar. If you have a question, you can enter it into the question box or the chat. We'll be monitoring both. We're working on getting Facebook Live up and ready. Once it is, we will also be monitoring your comments for any questions you may have if Facebook Live ends up working out. Go ahead and provide your name and your business so that we can connect with you. That'll help the gentleman at DeLeon Stang to better answer your questions. So thank you all so much again for tuning in. We're speaking today with Brad Hoffman, John Sheehan, and Brett Friedman from DeLeon Stang. The title of today's webinar is The CARES Act and Beyond, and they're going to discuss the ways that the CARES Act will benefit small businesses and nonprofits. So thank you all so much for being here. Go ahead and take it away.
All right, thank you, Ashley. Good morning, everyone. My name is Brett Friedman. I'm the Director of Business Development at DeLeon Stang CPAs and Advisors. As Ashley mentioned, we'll be taking questions at the end via the chat window. Any specific questions that anyone has that they don't want to share with the group, feel free to email us. My email is at the top of the chat window. We as a team...
Brett, can you hear me? I can't hear you.
Yes, I can hear you. You can't hear me?
I can hear you, Brett.
Okay. All right. Also at the end, we will be mailing out the slides, so you don't have to take pictures or anything like that. As a group, we've pretty much spent every waking minute over the last couple of weeks digesting information.
Bear with us, guys. We're trying to get the audio to work.
So, Brad, you can hear me?
I can hear you.
Okay. Hey, anyone in the audience, if you just type in the chat box, if you're able to hear me, we can hear each other. Okay. Thanks, Don. All right, Ashley. So it looks like everyone can hear me except Ashley. So I'll go ahead and keep going, and we'll go from there. As I was saying, we've pretty much spent every waking minute over the last couple of weeks going through what is the largest stimulus or relief package ever. And it continues to evolve on a daily basis. And so I would recommend checking out our website, which is at the top of the chat box, as well as following us on various social medias, as there's daily changes that we're posting each day. Today we're here to help in the ways that we know how. We don't work in the hospital. Unfortunately, we're not going to create a vaccine, but we can help businesses survive and thrive, and we're here today to do just that. Our main speaker today is going to be Brad Hoffman. He is a co-managing partner of DeLeon Stang CPAs and Business Advisors. DeLeon Stang, for those of you who don't know, is a professional services firm focused on helping you succeed through strategic business insights and practical advice that keeps you moving. And with that, I will let Brad take it over.
Excellent. Thanks, Brett. Thank you all for coming out today. Well, coming out via web. It's been as Brett mentioned, a wild ride over the last couple of weeks. And we, as a team, have put a significant amount of energy into getting our head wrapped around this CARES Act. With that, I've spent just a little background on me for those that don't know me. I've spent the vast majority of my life in the business world and helping business clients and their owners. We also have John Sheehan on here today, who has as well, maybe not as long of a life in it as myself, but nonetheless, he's been spending his time in there, along with our head of research, Najee Lackas, Danny Rosamondo, and my partner who is on the nonprofit side, Clint Lehman, who has also jumped into this CARES Act as some of these rules and some of these things apply to the nonprofit arena. So with that, I'm just going to get rolling on along because it is a decent amount. Bear with me, I'll try to go pretty rapidly and keep things rolling. without getting it going too fast. So we're going to go through the CARES Act, and then we have on here organizational survival, and that's just essentially some things to do while we're getting through what is part of the CARES Act and which parts of it that you or your business may have been involved in. All right, so the CARES Act. On March 27th, the act was signed by the president and everything started rolling. And the following day, I pulled the entire team aside and we just decided that we were going to dive into this thing and figure it out. With what was going on around us, we knew we needed to be prepared to help businesses and small businesses. Not only, make it through this, but be able to give them the education, the understanding, and the knowledge they need to make their decisions. The act has parts in it for individuals, businesses, and nonprofits. Today, we will spend most of our time in the business arena, and a lot of these things apply to nonprofits, most specifically 501c3s, but we will try to delineate which ones are available for both as we go through. Right. What's in the CARES Act? So the CARES Act has several components. The big one that's available right now, or that's being utilized most readily right now, is the Paycheck Protection Program. That we'll spend a handsome amount of time talking through. Next is the Employee Retention Credit. Very, very valuable resource. And then the Deferred Payroll Tax Credit, or it's actually not a credit, but a deferred payroll tax component of the CARES Act. Next is rather big to some people, is the availability or the changes in the net operating loss sections. There were some clarifications in our qualified improvement property. And then lastly, but not least important, is the changes that were made to the retirement component of the CARES Act. So let's start with the Payroll Protection Program, or Paycheck Protection Program. The goal of this thing was for employers to be able to keep as many employees on payroll as they possibly could. That did two things. The employee would be able to maintain a paycheck, but then the employer would have less disruption as we came back around and the world started to come live again, leaving that employer with the ability to hit the ground running and start, reinvesting, putting more jobs into place, and keeping things moving. What the Paycheck Protection Program is an SBA-backed loan from a bank. It's designed for small businesses, and there's a forgiveness component to it, provided you meet the criteria. And there's two main calculations that we'll discuss as we go through the Paycheck Protection Program. One thing to note is the term of this thing, as defined now, is 2 years, and there is a deferral of 6 months from the time you take the loan. Our interpretation of the reading so far is that the 2-year term will end 2 years from the date of funding, and that it's a term loan that starts after the 6-month period of time. But there's not true, clear definition or instruction on that thus far. All right. Who is eligible? So it's designed for who they said in a lot of ways, the small business. If you have fewer than 500 employees, but you have employees, and you or otherwise you otherwise meet the SBA's size standards, individuals who are sole proprietors also qualify, i.e. independent contractors, those who are self-employed, tribal businesses, and then the 501c19 veterans organizations, but probably more predominantly important is the 501c3. Now, there was exclusion that happened on this, and there's plenty of talk about the next wave trying to get the other nonprofit organizations to either be able to participate in this or be part of the next program that comes out, much like our beloved chamber. So not all nonprofits are eligible, but the 501c3s are. All right, so the two main calculations part of this: how much can I borrow and how much will be forgiven, if we put it in very simple terms. So we'll start with the how much can I borrow. The verbiage says 2.5 times the borrower's average monthly payroll costs, not to exceed 10 million. Well, what's that mean to you? So put a little explanation on here. If you're a small business and you have employees, and let's say we have wages for the year of 400 grand, and our healthcare costs that we pay out of pocket as an employer, not what's withheld, but what we pay out of pocket is 50 grand, and then our retirement that we pay out of pocket is 30. That gets us to a total payroll cost of 480. And we're going to go more into the what makes those costs up, but I wanted to give a generic explanation. So we get 480,000 of defined payroll costs. Divide that by 12 equals 40 grand. That's your average monthly payroll. Multiply that by 2.5 gets us a loan amount of 100 grand. Much more to it than that, but very simplistically, that's how we get to the loan amount. Okay. The payroll costs, it's going to be, and there's two sets of definitions: what's included and what are excluded payroll costs. Gets us to that $480,000 number that we just spoke about on the previous page. So calculating our payroll costs, there was some confusion on this up front as to which number to start with. And the AICPA and the SBA later came back and narrowed that down. And it is gross wages, not including the employer side of payroll taxes, obviously. Also included in that are group health care. So as I mentioned earlier, the health care that you pay over and above what the employee pays. If you pay $1,000 total premium for the employee, but you withhold $400 out of their paycheck to cover, quote unquote, their portion, the $600 that you pay on the other side is the added cost that you would be able to put in there. Similar to retirement. If the employer is making a matching contribution, that is a number that gets to go into the included payroll costs. And then employer paid state and local tax. There's some states and municipalities have some add-on taxes. Pennsylvania has a bunch, but simply put, SUTA would be one that would fall into the bucket of an add-on tax that could go into calculating payroll costs. Now, here's where a lot of the calculation starts and why it got somewhat confusing as people were trying to put these together. The excluded payroll costs. So they didn't want exorbitant wage numbers in there. So basically, payroll costs per employee over 100,000, or excuse me, wages over 100,000 are excluded. So if you have an employee, let's say Sally makes $130,000 a year, you cap her number that you put into your calculation at 100,000. Our interpretation at this point is that healthcare and pension costs, the matching portion of a retirement plan, would not be capped at the 100 grand. We haven't seen any documentation that would tell us otherwise on that. Need to be primary residents in the United States. And the other quick thing to note is that if you have employees who received qualified wages through the FLMA credit that came out probably 2 weeks prior to the CARES Act, those wages would be excluded from calculatable costs in the payroll protection program. All right, next big calculation. So your first big calculation is obviously how much can I get? Next calculation is how much is going to be able to be forgiven, or how much will they forgive? In theory, if you keep all your employees on and you pay the same amount, the entire thing would be forgivable under the the act that as it is today. However, a lot of businesses experienced a severe downturn in the amount of employees they could house, that they could keep on, you name it. There's far less payroll in a lot of companies' books, and they're sitting there thinking to themselves, okay, I can do this. What's the impact going to be to the business at the end of all of it? How can I manage to do this, keep as many people employed, keep my business running, and not be massively in debt at the end of it? So there are limiters on the amount of forgiveness. What we're going to do is we're going to start with the eligible costs. So there's a bucket of eligible costs, and we'll talk more about that on the next slide, but that are calculated over an 8-week period of time. Go back to the previous one. The next limiter is going to be that no more than 25% of the forgiveness can be non-payroll cost. That one's a little bit confusing, but basically put, if you borrowed 100 grand and you had 50,000 of non-payroll costs that would otherwise be includable or eligible costs, only 25,000 of that portion of it is forgivable. The rest would need to have been payroll costs. Then you have a reduction in the number of full-time equivalents. We'll talk about that on another slide. And then receipt of a grant covered under another form of an 7A loan, i.e. SBA loan. So let's start with what costs are eligible here. What are the costs that we're going to include in calculating what I call the eligible cost bucket, the bucket of costs that are eligible to be forgiven once this 8-week period is. Payroll costs, and they're defined as we talked about earlier. The new part of this is we're calculating this eligible costs over the 8-week period immediately following the day you get your funds, the day the loan is funded. So payroll costs as defined earlier on the earlier slide and how we got the loan, but over that 8-week period. Next, we have interest on mortgage obligations, rent, and payments on utilities. There's the next portion for tipped employees. That gets a little bit more cumbersome to walk through. If you have questions on that, please follow up with us afterwards. But these are the eligible costs that make up our eligible cost bucket that I'll keep referring to over the next couple slides. All right, first is going to be, we're going to call these limiters on the forgiveness. Your first limitation is if you reduced employees' wages from a calculating period prior to our 8-week period to now, we get a limitation on our forgiveness portion. So if you had an employee that was making 100 grand up to the point where all this started happening, and you then you in order to keep them on and keep everything rolling, you reduce their compensation to 60 grand. Well, what the SBA is saying is you can't reduce someone's wage by more than 25% and keep it all in the forgiveness bucket. So in that particular case, we were at 100, we reduced it to 60. We were only allowed to really reduce it by 25 and still get forgiveness. So we have 15,000 that gets pulled out of our forgiveness bucket of eligible costs. And again, this is how we're interpreting all of this as of this point. There is not clear defined guidance on the forgiveness component of all this. The SBA has said they will issue that, I think it actually said very soon, and that was 2 days ago, 3 days ago. The next component is going to be your FTE. Believe it or not, this one actually gets even a little bit more confusing, but I'll try to break it down into understandable numbers. There's 2 time periods that you're focused on. Your pre-8-week time period, that's a qualifying period, and then your 8-week period immediately following the low. You're allowed to pick one of 2 sets of dates, February 15th, 2019 through June 30, 2019, or January 1st, 2020 through February 29th, 2020. Now, what that is it's average full-time equivalents. So let's assume everybody you hire is full-time, just to keep this simple. Part-time, there is a calculation in that as well, but let's assume you have everybody that's full-time and you have 20 people during the time period of January 1st, 2020 through February 29th, 2020, each week. So for each week in that bucket of weeks, you have 20 people. We now go to our 8-week period immediately following the loan. And let's say things had really dialed back and you'd scaled back to 10 people. So at the time you take the loan funding, you have 10 people on staff and you're paying them. And you keep those 10 for the first 4 weeks. And week 5 comes and you're like, things are picking up. So you hire the other 10 back and you have 20, 20, 20, 20 for the next 4 weeks. That gives you an average of 15 on your 8-week period and 20 on your qualifying period, gives you an allocable percentage of 75. So at the end of all this, when we touch base back at the end, we take that multiplier of 75% times our eligible cost bucket to give us our number of dollars that we would have forgivable. Just to kind of go back through it, you're first gonna have to make sure that you have that no more than 25% of your eligible costs are non-payroll. Then you're removing your decreases. Then you apply your FTE, get you to the calculable amount. And all of these are designed to be ratios to the best of our interpretation. So the news did a pretty good job of getting information out, but I think it was easy to be misunderstood when they said, have everybody hired back by June 30th and it's all forgiven. Our interpretation of the act is not how that works, and it would actually be an applicable ratio based on those 3 limiters that we see in there as of now. So how do we take advantage of this? You need to contact your bank or your banker and either go through their application process online or contact your banker and ask them what their process is. All banks are doing it differently at this point. We've seen anything from handing a package over to an automated online process. The banks have 10 days. You'll get a letter or an acknowledgement from the SBA letting you know that your loan's been approved. And then as of now, the banks have 10 days from the date of that letter receipt to fund the loan, to get you loan documents and then fund the loan. All right, so now let's assume you've done all that and we have the 8-week period coming. We need to track the costs. Again, qualifying these answers in that there's no direct guidance on this as of yet. However, what we're seeing, a handful, if not most banks doing is as the funds are being issued to the small business, they're putting them in a separate account and asking the business owner to account for their expenses, i.e. their eligible costs, come out of that account so that they can track them clearly. It's not defined whether or not that's mandated by the SBA, but certainly isn't a bad idea in order to track your costs. Another thought is that if you are able to put them over in that bucket, but let's say you have payroll rolling out of your regular account, having a same day transfer of the exact same amount going over to match the amount going out in payroll. Throughout this, we can't stress how important it is to keep accurate records. I mean, that's all the time, but most specifically relating these eligible costs and anything dealing with the loan. The second part of that is keep your invoices, keep the actual invoice support that you may otherwise scan and sort. Keep those things segregated and in a package so that when the application has to go back in for forgiveness, you have everything in one place. And that kind of sums it up on the payroll protection program. We're going to jump now into the employer retention credit. And obviously we'll be circling back around with questions at the end. So we'll shift gears and get into the employee retention credit. It's a little bit more straightforward, I guess. It's a fully refundable tax credit that you basically, the wages that you would keep are the wages that you're paying during the period of April 3rd or 1st through the end of the year, up to $10,000 of eligible wages, you get a credit of 50%. We'll go into essentially who's eligible and how that's calculated. The main requirement for eligibility on the employee retention credit is that your business either needs to be fully shut down or partially shut down or suspended due to government orders, or have a 50% decline in revenue compared to your previous quarter, the same quarter previous year. So if last year from, for quarter two, your sales were at 100, and now in 2020 your sales are at 50,000, that turns on your eligibility for this credit. Now, you don't have to maintain it at that level. It doesn't turn off until your sales reach 80% of the previous year's same quarter. That's tracked. That they haven't defined how that part's tracked yet. The tracking of the actual credit is tracked and will be tracked inside of payroll. So, the people who, the non-eligible participants in that are people who participated in the payroll protection program. They're not allowing the use of two forms of, so the payroll protection program turns into a grant. This is an actual credit. Can't double dip using those same wages, basically. The application of this, I'm sorry, what are the qualified wages? Qualified wages be employers with employees under 100, having wages throughout that period of time, and wages here again that were not part of the FMLA qualified wages. So if you took the credit against FMLA wages that came out 2 weeks prior to the CARES Act, those wages get pulled out of the calculation in calculating these wages. Employers over 100 employees, a little bit different. And if you have questions, please see us. The simplest thought process there is they're only giving, the credit's only eligible for those who the employer's paying, but they're not actually coming in and doing anything. Here we go, the calculation of the wage amount. Now the calculation on your slide has a misprint there. It shows the wages divided by 50%, so it's actually multiplied by 50%. So if you have someone who earned $1,000 in Q2 and you're a qualifying employer by virtue of the being less than 50% or shut down, you take a $500 credit against your employer taxes at the point where you pay your employer tax. How it's expected to work is you normally, at the end of each month or at the end of each quarter, you submit your employer taxes with your 941s and you make your payments. Well, if your normal payroll liability was $2,000, but you qualified for $1,000 worth of credit, you'd simply net that out and pay them $1,000. However, it's likely that you could have a credit of, let's say, $3,000, but your liability only be $2,000. They've allowed this thing to create a refund situation for which the government will credit you back that $1,000 in the form of a refund into either by check or by EFTPS. So the how to take advantage of it part, started to allude to this earlier. Most of this is going to be facilitated by your payroll provider. The payroll companies, ADP, Paychex, Paylocity, all companies are ramping up to be able to support these calculations and these credits being applied to your situation. I would touch base with them because it's going to be important for them to know, are you going to take advantage of this, or have you already applied for and or received funds from a payroll protection program? And you're not eligible to take both, obviously, as we mentioned earlier. Now, that's kind of the payroll, employer payroll credits. We'll move on to the deferred payroll tax. This one is actually probably the simplest of all, I believe. They're allowing you to defer your employer taxes. So as we mentioned in the last one, you get to the end of each month or you get to the end of each quarter, and you would normally pay the employer tax for your half of the Social Security and Medicare. Well, now you can push that down the road. And how far you can actually push this back to, you can take all your liabilities from April 1st through December 31st and push those out to 2 periods. Half of that being due December 31st in 2021, and the other half of that being due December 31st, 2022. And I realize I misspoke, it's March 27th, so 2 days. But it allows you to keep cash in your business longer. Who is eligible? Once again, you cannot have received dollars from one of the SBA loans with forgiveness. And again, this is another one that you will work with your payroll provider, letting them know that you want to take advantage of this and how you plan to do it. You can do over the 2-year period, and there's options inside of that as well. You're not forced to, per our interpretation of this, but you're allowed to spread it over the 2-year period of time. Transitioning now, these are going to get in somewhat a little bit more technical, but I think very valuable for businesses who have been investing in their business over the last couple of years. The Tax Cut and Jobs Act back in 2017 had some changes that removed flexibility inside of our net operating losses as far as how much we could take and how far we could take it back, or that we could actually take it back at all. The CARES Act removed our restrictions on those NOLs, our net operating losses. And they've made them retroactive. So losses that were generated after December 31st of 17, we can now either amend or file a 1045 and take our losses from either 18 or 19 and go back 5 years. Still carry forward 20 years. They've actually added an additional ability in there with the 1045. This came out on Friday. If you have a 2018 NOL that you would like to carry back and use the 1045 form, you have until June 30th to utilize that. After June 30th, you then will need to amend the return to go back to 5 years. But this could be huge if you had an NOL that you were carrying forward and it's pent up and you had light years in 19, you can now take that back and free up tax dollars from previous years that you had larger tax liabilities and get the refunds now. This is one that I would recommend contacting your CPA or your tax accountant in order to fully understand it. But just know that if you had NOLs, or as we move into the next slide, they also, as part of the Tax Cut and Jobs Act, they had an error, a drafting error, as they call it, on qualified improvement property. Simply put, if you've invested in a building or remodeled a building or built a building, the interior components of that building, there are parts of that the Tax Cut Jobs Act had restricted from bonus depreciation. What that means is they've removed those restrictions. If you've made interior improvements in the last 2 years, i.e. 18 and 19, contact your accountant or your tax provider, because you may now be able to generate a loss that creates that NOL that you can take back and get prior year tax dollars for, utilizing the 1045 that's now. Last and certainly not least is associated with the IRAs, 401k plans, and so forth. If you have employees or you yourself have a retirement account, you're allowed to withdraw up to $100,000 from the retirement account without penalty. Now, there's some qualifiers on it as of now that say that you need to be impacted by the coronavirus, and there's some guidance on that, but I wouldn't say it's definitive. Anyhow, you can pull up to $100,000 out of the IRA without penalty. At the same time, you're given 3 years to pay the tax on that. If we think back to the 2008 time period, there were a lot of people pulling dollars out of their retirement accounts. So let's say you pulled 100 grand out, you get to the following year and you didn't have enough withheld, that you didn't have enough cash to cover the tax. And typically what happened was someone wouldn't more out to cover the tax. And it was like a round robin type of event. They recognized and learned from that and said, okay, you can pull the 100 grand out, we'll remove the penalty, we'll let you spread that tax burden over a 3-year period of time. And the kicker on this is things turn around and you decide you want to get the dollars back in, you get the 100 grand back in, you can actually go back and amend those returns and receive your tax that you paid in for year 1 or year 2 if you've already paid those 2 years in. There is some gray area on the application of that still. That's not narrowly defined as to how that happens, but that's our interpretation of how that would unfold as we moved out through the next 3-year period of time. Moving on, things to do while you wait to hear from your protection program or loan or any of this other stuff. These are just some general guidelines of things to think about. Keep cash in the door. If you were considering making purchases that were future-based or larger purchases, really hash that out and make sure it's the right time to do it. Investigate your personal expenses. Make sure that you're running lean on the personal side of stuff to make sure that you can keep the cash burden that you as the owner are putting on the business at a minimum, so that if you don't need to take as much out, you can let more in and keep the business rolling. Supply chains, the construction industry, they're still working. They're considered essential. They're a great example. Some of their biggest problems are suppliers not being able to get them some of the supplies that they need in order to keep the job rolling along. Keeping in touch with your workforce, making sure that if you've laid folks off or you've furloughed employees, keep in touch with that group of people, so as this turns around, you'll have those resources to be able to fire things back up. Keep in contact with your bank. Maintain a good relationship with those guys, your attorney, and obviously your accountant or your tax provider. They're all going to be helpful to you during this time period. And last but not least, obviously, stay safe and make sure we all follow the rules that we're trying to abide to get this thing over and done with. That concludes the formal portion of what I wanted to go through here today. Obviously, with this many people on here, we wanted to see if we could entertain some questions. And Brad, I'll let you take it from here.
Sure. Thanks, Brad. We'll let you catch your breath. Wait for some questions to roll in here. Again, please enter those in the chat box and we will get to all of them. As Brad said, I think he mentioned the word interpretation probably 5 or 6 times throughout the presentation. We are going off guidance directly from IRS and other agencies. We're getting that on a daily basis. And so again, I would encourage you to visit our website, which is at the top of the chat, as well as on this slide, as well as send any questions or follow us on social media for all the daily updates. Again, if anyone has any questions, if you want to submit those into the chat window, or if it's something you'd like to talk offline, feel free to email us. My email is in the top of the chat window, and as well as our info at DeLeon Stang. We will get to that on a daily basis. We do have a question here. The first one coming in the Q&A area is asking, what are the supporting documents for loans under the CARES Act? Example given: tax returns, proof of prior wages, other IRS forms, business marketing plans, bank statements showing expenses and wages. And so I think the question there, what are the supporting documents that the banks are looking for loans under the CARES Act?
Okay, so yes, under the Paycheck Protection Program, we've seen and we've helped many businesses get their applications together, and have been dealing with I would say almost every bank throughout this region at this point. And I can tell you each bank has asked for several different things. Most predominant is the payroll information, your 941s, your payroll reports, your W-3, W-2s in some cases. There was, as it first rolled out, the act stated that it was a rolling 12-month calculation, or a rolling 12-month period. The SBA later came back and said they would accept 2019 or the previous 12 months. So that created a little bit of confusion as to how to document that. And I'll tell you, some banks were taking it both ways. You could submit the documents in whole for either period of time. Most banks were not asking for marketing plans, financial data, frankly, at all. The application has a questionnaire that's on the front, or a disclosure statement that you need to go through in order to apply for the loan. The one main question that refers to your financial impact talks about the financial uncertainty of the current environment. I'd encourage you to go to the SBA website and take a look at the actual SBA application, the most recent one, and go through the checklist and see if those factors apply to you.
Okay. We have a number of questions here, Brad. So the next one is, if you are benefiting from the PPP, what happens after the 8-week period is over? Can you begin to utilize other options, or are you not eligible?
That's a great question. To the best of our understanding at this point, and Najee, please chime in if you've read anything more recent than when we talked a day ago or yesterday morning. They have not released any follow-up guidance from that moving forward. As of now, the employer tax credit, as an example, states you're not eligible if you applied for and obtained the SBA and or the loan forgiveness through that. So as of now, our understanding would be if you received the PPP loan, that would be the extent of your utilization. However, they're releasing stuff almost daily at this point as far as guidance and interpretations.
Okay, I'm just going to jump around a little here to try to keep the questions on similar topics. Again, for the PPP, this person has an employee that earns commissions. However, for the last 2 payrolls, they have not paid commissions, just the salary. Can they continue to do this until they receive the PPP loan? So
lots of questions surrounding that. The way the rules are written, the limiting factors, they use that 25% limiter. So my interpretation would be if you had an employee, let's get back to the example I used, that they were making $100,000 with the commission, and commissions are included inside of eligible payroll costs. So if you had someone who was making $100,000 with commission prior to this, and you haven't been paying them commissions, and that continues through the 8-week period, that would get calculated as part of that not less than 25% reduction, or excuse me, not more than 25% of a reduction. So without commission, if they were down to 70 or 65 grand, that 5 or 10 grand that they were under 75 would be excluded from the eligible costs.
Okay. I think I know the answer to this one, but I'll pose it. Someone is wondering, they are 501c6, and when do you anticipate a potential round 2?
Man, if I knew that, I could probably be pretty wealthy. I mean, I could tell the future. Not sure. I mean, there's been talks, and frankly, honestly, the chamber and Tony and Grafton would probably have a better grasp on the political side of that statement or that question. They've sent around the link to help petition or help advise or help everybody understand that the chambers and those nonprofits need assistance and need help as well.
Yeah, and just some clarification here from Malinu. I'm not sure if I'm pronouncing that correctly. I apologize if I'm not. On one of the previous questions, as far as the PPP and what could also potentially be applied for, they pointed out, which was, I believe in the slides, that someone could apply for the PPP as well as the EIDL, which is the disaster loan, but they cannot use the same expenses as far as payroll can't be used for both loans and things like that. And so there are some opportunities as we see how everything unfolds. There's certainly going to be a lot of updates as we get through this kind of 8-week period. That'll be a little bit of a moving target for each company.
That's
Oh, go ahead.
they're accurate. You know, we were trying to keep the slides simplistic, and the technical aspect of what they're referring to there gets a little complicated for mass communication, but they're right. You can't use the same costs for 2 loans. And frankly, John Sheehan, who's on the line, has been instrumental in segregating that particular aspect of those 2 loans as it relates to the PPP and the EIDL.
Okay. Someone has a question. Has the SEP contribution deadline been extended for 2019?
Najee, have you seen the release on that? Najee's been following the Internal Revenue Service on a daily, if not hourly basis. We had talked to several financial institutions about that, and albeit not, you know, an official release, 1 or 2 had mentioned that they had planned on accepting them up through a period of time.
Brad, I think the way Najee is signed in here, he might be having trouble. I'm not sure if he can be unmuted, but I'll chime in on this one. It crosses.
Okay, good. Yeah, you're actually.
The sub contribution. So everything that would normally be due 4/15 from a contribution standpoint is moved to July 15th, 7/15. The SEP itself, if you file an extension, can actually be extended all the way till October 15th when you file the return. And so there is additional time for SEP contributions, both based on the original deadline being moved to July 15th from April 15th, and then an extension deadline of October 15th. Next question we have, so someone has an S-Corp and they have held off taking a paycheck so far this year. In 2019, they took a large paycheck only at the end of the year rather than payroll throughout the year. Do we know if this will impact their ability to get a PPP loan?
Don't actually. That's a very specific question. I think, and it's not uncommon in the S-Corp arena. I think I'd want to discuss further with that particular person the underlying ramifications of the why, and then be able to apply that to the current year, just to make sure that they're not going to put themselves in a situation of further clarification with the SBA.
Gotcha. And so that person's name is not listed with the question, but if they wanted to reach out to us based on the contact that's up on the slide or the contact at the top of the chat box, we'd be happy to provide some more clarification on that. Another next question is, if my primary bank for my business account has opted out of participation, would I apply with another SBA approved bank just for the sake of this loan?
Well, yeah, if yes, I would say you're certainly allowed to and eligible to apply to a different bank. The banks were given the ability to to not take non-clients. So that if you were not a client of the bank prior to this happening, they were allowed to say that they weren't going to accept new applications. Now, at this point, we've been on this for 14 days now. Yesterday, one of the team, I believe it was John, actually received an email from a bank who had previously had the exclusion in place that said we are now accepting applications for the Paycheck Protection Program loans from new businesses. And what they clarified was they would like you to move your deposits and your business banking relationship to them for the application. There are other forms of funding out there that will do it without a banking relationship. We don't endorse or sponsor, obviously anybody, but I would say you can certainly investigate the options, and it would not hurt for you to see if there is someone else who would lend you the money or let you in the program.
Okay. There's a specific question here on the rent qualifying time period. And so the time frame for rent qualifying, if you could just briefly go back over that. They're asking the rent prior to 2/15. They didn't quite understand the rent qualifying time frame.
Great question. Thank you. When I mentioned the prior to 2/15, it's what they were referring to there is you needed to have a lease or lease obligation or rent document in place prior to 2/15. However, the qualifying rent payments are going to be during the 8-week period immediately following the funding of the loan.
Okay. A couple more here. So the next one, if using the PPP loan, what if your full-time employee count goes down due to normal attrition, so not related to COVID? If you're currently recruiting for those positions showing intent, does that make any difference?
Not to our not to our knowledge as far as the intent. Keeping in mind how the calculation works, it's going to impact the dollar amount for which you were forgiven, not necessarily the amount that you would be applying for. There are 2 time periods that you're allowed to use for your qualifying period. And this is really going to apply to your FTE, your full-time equivalent limiting calculation. This is I have 10 employees for the first 4 weeks and 20 employees for the next 4 weeks, divided by my 20 from the qualifying period, getting us to that 75%. So it's not our interpretation of all of those qualifiers is that none of them are all or nothing. They're ratio applications.
Okay. Someone in the chat window is asking, is there an anticipated time frame for bank notification of PPP application status?
So the team can chime in on any of these if they would like, but I think the most generic statement that we can say is each bank had a very different process. Some of the smaller banks, I shouldn't say like that, but some of the more close relationships and regional banks, they had very rapid turnaround times on their communication. hey, the banker reaching out to the client or the customer and saying your loan has been approved with the SBA. The larger banks, some of the larger banks were very, very fast, and in fact, one of them had went from loan to funding in less than 5 days. Most are much longer than that. Most are around a 10-day for acknowledgement and then funding. A lot of banks are funding this week that had started out the previous when it went open on the 3rd and 6th. Well, 3rd, 4th, 5th, and 6th. There were banks open all weekend, actually.
Okay, and here's a good kind of add-on to that. So another person is asking, if we've applied for the PPP and have not yet been approved, can we sign up for employer retention credit or deferred payroll tax, or do we need to wait for a determination on our PPP loan app?
So there's some good news in that one, and we have a client who is in the 501c 5 or 6, I believe it is, and we did an analysis for the employer retention credit, and they're a quarterly filer. And our recommendation was, because they were also interested in that second round, and if they would be eligible in the second round, because you're, in our interpretation of how this is happening and how it's going to be facilitated is you haven't actually used the credit until you use the credit. So if you're just accumulating those costs throughout a quarter and you haven't applied for the credit yet by virtue of filing the 941s or filing anything with the service, I actually think it can work the opposite direction in that you're accumulating your data on the credit side while you're waiting for the application. And if you get if your application gets approved and you get funded, you can tell your payroll provider, hey, turn off the credits. I can't take those. I got funded on the other side of this.
Okay. And our last one here, I'm going to run through it. This may be another one we may want to take offline. There's some specifics here we might need, but it says my LLC is 6 years old, is comprised of 2 partners with capacity to add independent contractors and full-time equivalents as volume demands. Partners agreed to contribute to expenses, not draw salaries for the early years till there was enough revenue showed up. For the CARES Act, would we not be able to request the PPP or loans as we have not paid out from the company?
So definitely, I think we could use a little bit more understanding of everything they have going on. But I would say if you have a single member LLC or partnership that produced 0 net income, I believe that's for a partnership. I'm pretty certain you're not gonna be eligible on the PPP side because you don't have employees and you don't have net income, so you don't have a qualifier to turn your eligibility on necessarily.
Okay. All right. Well, thank you again. That looks like all of our questions. We really appreciate everyone who attended. Again, our goal is to do this, to share the information we have, to help whomever we can help. Our information is on the screen. Please reach out if you have any questions or things come up. And we look forward to bringing everyone updates as we receive them. Thanks.
Thank you, everybody.
Awesome. Thanks so much, Brett and Brad. We're going to go ahead and, since we're over a few minutes, but thanks so much, everyone, for joining us. This video is going to be available on the Loudoun Chamber website on the COVID-19 page, just as an additional resource to you. But thanks so much again, Brad, for this webinar. So much helpful information. We really appreciate it.
Thank you.
Thanks. Have a good one.
All right. Thanks, everybody. Have a great day.